XRP's price has a lot of room for growth. And I'm not talking about your typical price predictions or TA or chart analysis. I'm talking about XRP ledgers, AMM, and how the liquidity pools created could really be the rocket fuel that XRP needs to reach way beyond all-time highs. Now, before you click away and think, oh great, another technical crypto video, stick with me because I'm going to break down the way that this makes a lot of sense. And we're here to talk about how XRP's price could explode higher as a result of liquidity pools being put on the network. So picture this. You have a massive digital pool filled with XRP on one side and dollars on the other. Each time someone trades between dollars and XRP, they are essentially dipping in to that pool, creating ripples that affect XRP's price. But they're mathematically designed to push prices higher as more people buy in. It's like building a price escalator. This is something most people don't understand, especially the market cap guys. When you buy XRP from a liquidity pool, you're not just making a simple trade. You're actually changing the entire balance of the pool. Every single purchase removes XRP from the pool and adds another asset like dollars. This creates an automatic price increase because now there's less XRP available in the pool. This basically starts creating a digital supply and demand squeeze happening in real time. But here's where it gets even crazier. Think about what happens when billions or trillions of dollars start flowing into these pools. We're not talking about linear price increases. We're talking about exponential moves to the upside. Let me give you a real example. If a liquidity pool has $100 million worth of XRP and institutional investors pour in another billion into this pool, we could potentially see the price multiply several times over from just that one pool. Now, I know that might sound too good to be true. Well, and there's some interesting mechanics at play here. Remember that formula I mentioned earlier? It's called the constant product formula. X times Y equals K. Don't worry if math isn't your thing. All you need to know is that this formula ensures that as more XRP gets bought from the pool, each subsequent purchase becomes more expensive. It's like a built-in scarcity mechanism that drives prices higher and higher. And this is where it really starts to intrigue me. This is something hardly anyone is talking about. When major financial institutions get involved with these liquidity pools, they bring sophisticated trading strategies. They can amplify these prices even more. We're talking about giants like BlackRock, JP Morgan, Goldman. You already know who the similar companies are here. And they're from the TradFi side. So when they move in, they're going to move billions, if not trillions of dollars. Imagine what happens when they start deploying that capital. The beauty of this system is not just speculation. It's built on real mathematical principles. Every trade, every transaction, every bit of liquidity added to these pools creates a stronger foundation for XRP's price. It's like building a skyscraper. The deeper and the stronger the foundation, the higher it can go. Now let me share something even more interesting about these pools. When large amounts of capital flow in, we see what's called a compounding effect. Every trade doesn't just act as price action in isolation. It creates a cascade of price adjustments across multiple pools and exchanges. Arbitrage traders jump in to profit from the price differences, making markets and adjusting their positions. And this whole ecosystem of activity generally pushes prices higher. And it gets bigger with government and central bank involvement. While they might not directly participate in liquidity pools, they're familiar with the systems. The Federal Reserve, for instance, uses liquidity facilities to manage traditional markets. As these institutions become more comfortable with digital assets, imagine the impact on XRP's price when they start using these decentralized pools. But let's, hold our horses for a second. Let's get practical. Why should you even care about this at all? Because understanding how liquidity pools work gives you a massive advantage in crypto. You know why prices move the way they do, where big money is flowing in, and most importantly, how to position yourself to potentially profit massively off these changes. The future of XRP isn't just about adoption or use cases anymore. It's about this entire ecosystem of liquidity pools, AMMs, creating self-reinforcing cycles for price appreciation. Every day, every pool, every institutional investor that gets involved adds another layer of support for XRP's infrastructure. So liquidity pools aren't just another crypto innovation. They're a fundamental shift in how digital assets are traded and valued. And for XRP, this could be a catalyst that drives prices to levels that seem impossible today. We're not just talking about small gains here. We're talking about the potential for massive, sustained price appreciation driven by mathematical certainty rather than speculation. In my opinion, this is one of the biggest things that could drive XRP's price to new heights through the power of AMMs and liquidity pools. So if you found this information valuable, please smash that like button, hit the subscribe, and stay updated. Drop a comment below and let me know your thoughts on liquidity pools and the XRPL. Stay curious, stay hungry, and we'll see you on the next one.